Good evening, everyone. It's Alicia Sharp, your Northern Virginia Realtor. I hope you are all doing well. And we are back again with the Queen of Mortgages, Marquita Woods. How you doing, Marquita?
I'm doing great. How are you?
Good. Well, it's so good to have you back again. Marquita has been in the mortgage industry for over 20 years. So, you know, we are going to have a great discussion tonight. She definitely has the experience and the expertise. She's the branch manager with Fairway Independent Mortgage Corporation. And if this is your first time joining our live, my name is Alicia Sharp and I'm a realtor in Northern Virginia. Both Marquita and myself, we are on a mission to help as many individuals as possible become homeowners. So that's why we come together to do these lives to help people become homeowners. If you have any questions during the live, you can put your comment in the chat and we'll do our best to answer them. I only will be able to see your comments if you are joining on my Facebook page, which is Alicia Sharp Realtor. However, if you are watching the replay or on another platform, feel free to email me or message me, alicia.sharp at exprealty.com, and I definitely will respond to all of your questions. So we're going to go ahead and get started. Again, I'm here with Marquita Woods, the Queen of Mortgages, and tonight we are going to be talking about credit report secrets for home buyers. And I know sometimes when you think of credit scores or you think about credit reports, people get overwhelmed and stressed out, especially when their credit needs work. So my first question, Marquita, is I want to ask this question for people who have never ever been through the home buying process before. They have never purchased a house. So number one, if you can tell us, why do lenders even look at your credit report? And then also, what exactly are you looking at?
Well, it's interesting. You mentioned that I've been in the business a long time, probably too long. Um, I got some gray hairs to show it. Thanks God for Miss Clairol and all this other stuff that's out there today, right? So when I actually first started, we didn't use credit reporting as much as a metric of people's ability to pay. But as the industry has come full circle, like even if someone had bad credit, if it made sense, you could still make it work. But like everything, things evolve, and we've evolved now that the credit is the most important thing when buying a home because in their mind, far as lenders and banks, it judges your ability to pay back. So really it's about the risk of lending a person this amount of money, what is the likelihood that they'll pay us back? So credit scoring is in play as a factor as far as that is concerned. So it's probably the biggest portion outside of income and assets is actually the credit score. So you could have great income, great assets, but
Mhm.
if you don't have the right credit score, then can't necessarily get you in. So tonight is definitely important to share information about. So yep. We're gauging you on a number on how likely it is that you're going to pay us back, not hundreds of thousands, not thousands of dollars, hundreds of thousands of dollars. So very important piece.
So you're a lender, someone's applying for a mortgage and you're looking at their credit report. Can you tell us exactly what are you looking for when you're looking at the credit report? What matters, what doesn't matter?
So right away, it's based on scoring,
Mhm.
right? So we do want you to have a credit score. The baseline score that I'd like to see is at least 620. So we're looking at all three credit bureaus. And I have to just give the caveat right away. When I say we're looking at all three credit bureaus, there are three: Experian, TransUnion, and Equifax. However, we have a different scoring model in the banking industry and finance and mortgage industry than what most people encounter that are monitoring your credit on a Credit Karma, Credit Sesame. Even Experian has what's called a consumer facing app where you can get credit scores. So we have two different credit scoring models. They're using a Vantage score, that's Vantage with a V, and we're actually using a FICO model. So the credit scores are different. So right away, I'm checking credit scores to see if you have the minimum required for what we need to do to move forward. Now, 580 is the lowest that we will go at Fairway for actual lending is concerned. But I love to see clients with a baseline of 620 because it opens up other programs, better rates, maybe less strict underwriting in that range. And that would be considered, really just at average as far as credit scores are concerned.
Okay, so we're looking at their credit score, and also you're going over it. Sometimes people get a little stressed out by what's on their credit report. Maybe they miss payments, student loans, whatever the situation may be. But when you're looking at the credit report, are there any items that you highlight more than others?
Absolutely. And that really is a great question. And I would say that's probably why we say, tonight was going to be about a little bit of the secrets because,
Mhm.
yes, maybe someone's had credit challenges in the past and they want to restore their credit or work on getting their credit together. And they go out and they start paying off items. And then they come in to someone like me. They've seen maybe their Credit Karma scores go up. And then they come to the lender and the score is still below the score that's actually needed for approval, or it's much lower than they initially thought. And that's because the scoring models are different and what we're looking at is different. And when you go in and start paying off negative items, you actually could lower the score. And these
Mhm.
aren't even things that lenders are paying attention to. So I'll tell you the real critical time frame for real on a credit report that I'm looking at right away is what's happened in the last 12 months, to
12
be
months.
honest. And then the more comprehensive look back is about 24 months. So the person may had, a life situation in 2005 and had some collections or some accounts that, went awry and they're still on their credit report because they are on there from the date of last activity,
Mhm.
not the date that it was opened up. So then you go and pay off these collections. Well, the credit scoring model is not reading that this is debt. It's reading that a negative account has just been updated. So even if it's to the positive, just to say that this account is now zero balance, it doesn't help. So the first look back for us is 12 months. What's been happening in the last 12 months,
Mhm.
right? So I'm looking right away. Have there been any late payments in the last 12 months? No. Okay. Are there any new collections that have come on the report in the last 12
Mhm.
months? So these are the things that I'm going to focus on first, far as raising credit scores or credit restoration. And then the next thing that I'm actually going to look at is, do you have any accounts in dispute? And this
Mhm.
is going to almost sound like a double-edged sword tonight because part of what I'm going to say to raise your score has something to do with disputes. But are there any accounts in dispute? So we want to get those things out of the dispute language because typically the desktop underwriting, which are approval systems that are tied into the credit reports with us, are not reading the report properly with that account disputed. So that's something I always look at. And then public records. You
Mhm.
have people that may have filed a bankruptcy and they're so concerned they don't want to say, oh, I filed a bankruptcy, or they're worried about it, or it's there. Well, technically, again, remember I told you that 24-month look back, once it's 2 years old, it's not even factoring into score.
Okay.
So really what happens is the further away you get from the negative payments or the late payments or the slow pays, the less is counting in your scores, right? So the high impact is the first 12 to 24 months of what's really going on. So with a bankruptcy, as long as it's been discharged, depending on the loan type, 2 years from the time of discharge, not when it was filed, then we're not even counting that or worrying about that as far as your credit scoring is actually concerned. So I'm also looking at, scoring mix, like what type of accounts do you
Mhm.
actually have
Mhm.
on your credit? Because some people are like, well, I have no credit cards. I pay all my bills on time though. Maybe I have a car loan, student loan, but I have one credit card that I don't use. Why isn't my score higher? Because it's all about a comprehensive view, like a scoring mix of what type of credit you have. And believe it or not, this is going to shock some people. Revolving credits. Yeah, these little things right here. Let's see if I can find one.
Mhm.
I'm sure I got one, right? A Visa is going to have more. A Visa, yeah, that Visa is going to have actually more weight in the credit scoring model than the installment loan. And
Wow.
And that's because of the way our scoring model is set up, right? It's, are you paying on time, the type of credit, the length of credit, what you have in your scoring mix. So the way it's viewed is basically that if I take this card or whatever, and I go out and I actually go to dinner, I buy some shoes, buy a new mattress, whatever, put it on the card. When I don't pay the card, can Visa come over and take back the dinner, the shoes, and the mattress?
You already bought it.
Already consumed, already bought, already used. So no. Mm-hmm. So credit cards have a very high weighted average in our scoring model because the thought process is many installment loans are tied to something bigger for the most part. Your installment loans will be like your vehicle. Hey, your house, what we're talking about right now, homes.
Right.
Or student loans have installment payments, which you cannot write off in bankruptcy. So if you don't pay the car, you're going to come out the house, and where's the vehicle going to be? Gone.
Right.
They're going to come back and take it. So it's like, okay, let's see how you act with something that has really no consequence other than, you're going to have bad credit. Right. So let's give that a little bit more weighting in our scoring model. And that's typically what happens. So ways to raise credit are how you focus and how you really work with your revolving credit. It's just like the house. If you don't pay, you don't stay.
Exactly.
Right.
Exactly.
So there, we already know that there's a reason or impetus, a big drive on why you want to get those things done, because the car is going to be gone. The house is going to be gone. Don't pay the student loans. You can't just get rid of them in bankruptcy. Whereas if you have a credit card, you've already went to dinner, you've already wore the shoes, you've already slept on the mattress. They can't come back and get anything that you've used this card to get. So that is one of our tricks or secrets is in raising credit score is to focus there first.
Wow. You're sharing a lot of valuable information. And one of the things you said is really you focus on the past 12 months. That's really, really important.
That is my first tier as looking at it from a lender is what happened in the last 12 months. And then from a scoring aspect, what's happened in the last 24 months. But anything outside or past that, for the most part, it's diminishing in value and how it's hurting the credit score. But again, we think, I just want to do the right thing and I'm going to go pay all this stuff off and it's going to raise my score, when actually the algorithm is just reading that a negative account that's older now has been updated. It's not reading what the update is, positive or negative. So initially paying these things off may drop your score before it raises it back up again.
Wow. Now, I know you see a lot of people with challenging credit who apply. They want to purchase a home. Mm-hmm. If you get an application and maybe their credit isn't good, how long do you suggest that they reapply, or how long do you think it normally takes to raise that credit score so they can be in a position to purchase the home?
That's a great question. And I get the question all the time. And I have to preface it first that the situation as far as having challenging credit didn't happen overnight. And typically the solution is not going to happen overnight as well. Right. So there is a process. However, because just like everything else is so specific to your overall profile, it's very hard to put time, like a specific, hey, in 90 days, this person should be, you could be ready to go. We really don't know until we actually take a look, right? And most people is where they shy away because they feel like it's a reflection of them or their character, who they are as a person, because of something that's on a report, right? And many times it's people that have had life situations, etc. Or if it is poor behavior that led to the score being down, then we need to correct that behavior before we even come into the thought of financing, the overarching goal of financing a house. So it really just depends on how far you're away, what's really there, and also are you getting guidance from the right type of person? Like if you want to buy a house, you should be working with a lender to help you get your credit scores up for buying a house, not for just general credit repair to say, I need these things taken off my credit, etc. I mean, we have some people that have clearances, so they have items on their report that they need to address. That might help them, but that's not necessarily what's going to make your score rise to buy a home. That makes sense. So it's very individual. I've had scenarios where we've had just a few tweaks because we were able to use our plan on the back end of credit utilization, and having some little tips and tricks on changing the credit utilization was just enough to get somebody, over the hump. And that was without actually paying off collections or things like that. So I would say definitely my 3-step thing, which it looks like you want to ask a question. Go ahead.
Oh, no, go ahead.
Oh, no. So my 3 steps, if you say, still, Marquita, I really don't want to talk to you right away because I feel like you're going to judge me, and I promise you I will not. 20 years, I've seen everything, been through some things myself personally. So I understand. I know you can come back if you do the work the right way. Right. So I'm going to give you 3 tips that I feel like are hacks, or not necessarily hacks, that if you really want to work on your credit score, I want you to focus first on your credit utilization. And what that means is how much credit off of your credit card that you have in play versus whatever the limit is on the card. Right. So let's just say this thing has a $10,000 limit. Then I want you to have that at least 30% or lower. So I want you to have 3,000 or less at least, right, on the card. Never let it go above that if you want to raise your score quickly or sooner than later. So if money can be placed at something, take it on using your credit utilization and getting your credit utilization down. That's going to raise your score just as fast. Now, obviously, you can't pay anything late during that time. And I'm sorry, I just give the disclaimer that this doesn't work if you pay stuff late. So we already know we're not paying anything late, but we need to raise our credit score. We're going to tackle the credit utilization at that 30% level, at least to start. And that's overall. So how do you figure that out? If you have 5 credit cards, it is $40,000 in credit, then you don't want to have more than 12,000, even if they're spread out over cards, in play at one time. So that is definitely going to raise your credit score. But if you want the ultimate hack of raising it very quickly and you're able to do it, put money towards the debts that are going to raise the score, then I like to get the things down right at 9%, right? So just slightly under 10, right at 9%. I don't know what the magic number is about that, but that does give you way more points. But for the average person, get to 30% credit utilization. That's number one thing I want you to do. Now, if you can't afford to pay the things down, possibly call the creditors. Maybe you have been paying on time. You just see if you can get a credit line increase. It's going to create the same thing, some distance between how much you have in play versus what your credit limit is. So ask for a credit line increase. That's one other thing that you can actually do to work on your credit utilization. The other thing that you actually can do, now you have to do this with the right person, and they have to like you or love you enough to do it, is ask to be added as an authorized user to someone's card who has low utilization, as well as has had the card in a long time and has it in good standing. They never actually have to give you the card, but they can give you their credit history, and it factors into the algorithm to actually hack the credit utilization. So this message probably will self-destruct in 5 minutes, but there you have it, folks. That is an insider tip on ways to manipulate the score as far as credit utilization is actually concerned. And I shouldn't use the word manipulate. It's just playing the game with the rules that are actually in place, right? So we already know you don't have any late payments in the last 12 to 24 months or so, or they're older payments. So those are some things that I tell people to focus on. The other thing is to go ahead and dispute those negative items before you jump out here and start just paying off stuff. I had one lady who was like, I don't even remember what it is. So she's like, I seriously don't remember. I don't know what this account even is. So I said, just like you don't remember, they might not remember either, because technically, if they've sold it to a collection company, they've kind of already written their loss off at this point. They're just trying to collect some amount, pennies on the dollar, et cetera, but they need to be able to prove that this was actually your dad and you owe them this money. Well, she went to dispute it, and lo and behold, the company had went out of business. So that was an account that's going to be, removed and actually help her credit score, because it's totally going to be removed. So to actually make sure you want to do that is dispute those items that are older. Now, do not do this. And I've seen this, like the people say we're going to help with credit restoration, and they go over and dispute every account on the report. and you're actually making payments, but they still disputed that too. So just be very mindful of who you're working with as far as credit restoration is and what the actual goal is. The goal of disputing is to make sure that the stuff is reporting properly. Is it even really yours? Can you prove that this is my account and this is how much I owe? Right. So if they can't do that, they're able to remove those items. So but when you come to us, you want to have all of this already taken care of, right? Because we don't like to really see dispute language open on accounts at the time of getting ready to do a mortgage.
Wow, that was a lot of valuable information. That was great. And so it sounds like people really need to be checking their credit report on a regular basis just to make sure that there's nothing on there that shouldn't be there.
Exactly, which is one of the reasons why I do actually like some of these apps, such as Credit Karma or Credit
Mhm.
Sesame, Credit Wise, or they got a bazillion of them. I mean, credit is $1 billion industry. You and I are actually on the wrong side of credit. We need to be working with the credit, right? Because it's everything's tied to it. It's extremely important, and now we've adapted with these apps. So I just want to say I like those apps from the standpoint of monitoring what's going on versus them actually believing though that that is your score when you buy a home. If you want to check the most accurate place to try to figure out what your scores would be when dealing with a lender or a bank such as myself, go to myfico.com. Then you can buy a single reporting report. It's $60. You can pull that in, and that is going to mirror the closest thing to what a lender is going to have, not any of these other sites. So that is also a gem for you. If you don't want to have your credit pulled right away, then you can go to my FICO and get a gauge of where you really are as far as a score is concerned. You do have to pay, but it's
Wow.
worth it.
So as we come to an end in our conversation, is there anything else you would add to that applicant who is feeling stressed out, overwhelmed, they don't think it's possible? Anything else that you would add before we end our discussion?
Well, I used to play basketball, so I have to bring it back to an analogy of that, right? Like you cannot win the game if you do not shoot the shot,
That's right.
right? So if you're not willing, you got to take a shot. You got to look, you got to see what's there, and then you can prepare yourself to win the game. But when the time comes, you got to go ahead and take the shot. Can't be over here keep faking, pivoting. The clock's running out, and you just holding the ball. You don't know whether you're gonna win or lose because you're scared to take a shot, right? So with that in mind, okay, here's the thing: you don't know what you don't know, right? So you need some coaching. You need a game plan. You need a buying plan. And no, I don't really tell people no. I tell people not right now, but here's
Mhm.
the steps. Here's the buying plan. Here's what I'm going to coach you to do. And then you got to be able to go out there and now execute on the plan that was given, right? So I just say, fear is a very, very tricky thing. Is you're still not going to move anywhere further. You're going to be out there just pump faking. So you might as well, get it over with if you really want to, win the game of home ownership.
That was great. So, Marquita, if people want to get in touch with you, I'm going to put it in the chat. What's the
Okay.
best way to get in touch with you?
You can reach out to me at queenofmortgages.com is my website. So if you just Google that, it definitely should pop up. And there's a contact me form there. You can schedule a time to consult with me at chatwithmarquita.com. You can find me on Facebook, Instagram, um, LinkedIn, not so much, but you can also Google Marquita Woods. My username is there. And just, get in touch. Like they say, Rick Pitino is a famous basketball coach, and he says the 5 Ps, right? So proper planning prevents poor performance. So if you do the plan, it'll prevent poor performance, later on down the road. And that, I think that's a misnomer that people think too. Well, my lease is up in 60 days, so I'm just going to call right before the lease is up because I think everything is okay. No, you should already have that plan in place. If you're
Mhm.
looking to buy 6 months out, is enough time to at least see where you really stand either by talking to a lender and getting a game plan, or at least pulling my FICO and getting an understanding of where you actually are.
Excellent information. So don't be afraid to try. If you want it, you never know until you try. So that's what it sounds like. And get yourself educated and make it happen, basically.
Yeah. I think we were ending the call last week, and I was saying that I had someone, I gave them a game plan. They took a shot. It wasn't ready. And I gave them a game plan on what they needed to do. And according to our simulator, if they did it, they would be ready in about 60 days. Well, unfortunately, and not unfortunately, everything in their own time, it took them more like 12 months to do exactly what we had asked them to do. But they are under contract and they're going to settlement here in the next couple of weeks. So they worked the plan as we provided for them. Took them a little longer, but they're going to be homeowners now.
So to sum it up, it's possible. You just got to be willing to put in the work.
There you go.
Thank you, Marquita, once again for a great conversation, helpful tips. I know you helped a lot of people on this evening, so thank you so much for your time.
Truly my pleasure, and thanks for allowing me to come on and share. Very passionate about this. I believe anybody that wants a home should be able to get a home.
So again, if you want to contact Marquita, you can go to chatwithmarquita.com or queenofmortgages.com, or just Google her name and you will find her, and she's here to help.
All right.
Have a good evening, everyone.
All right. See y'all.